Hey everyone, and welcome to Talk ETFs, our weekly video series where we sit down with experts and thought leaders in the ETF industry and beyond. I'm Sumit Roy, Senior Analyst at ETF.com, and today I'm joined by Jeff Spiegel, US Head of BlackRock, Megatrend and International ETFs. Jeff, thanks so much for joining me.
Sumit, thanks so much for having me.
Absolutely. So, Jeff, you recently published the iShares 2024 Thematic Outlook. Can you talk about some of the highlights of that report?
So, in going, we wanted to be aware and cognizant of a major sort of change in markets that's happened over the last couple of years, which is given incredibly strong interest rates and a lot of fixed income assets from cash to further out the curve, the bar has kind of been raised. You really need to have high conviction in equities when you're comparing to some very attractive yields at lower risks. And so we really wanted to think deeply about how do investors get narrow? Where are those real pockets of opportunity where you can meet that bar? And we identified three areas. One is artificial intelligence. We've seen a lot of performance in some of the big kind of well-known names associated with this theme. We see performance broadening out and think investors need to own a wider array of firms to capture the opportunity. The second is medical innovation. So, two areas that have really been challenged the last year or so, in part because of higher interest rates, are areas like genomics and neuroscience, where we're seeing incredible breakthroughs, but also really strong valuations. In each case, actually in line with or even lower than pre-pandemic levels. And then the last is this rewiring of deglobalization ideas. So, this sort of one-way escalator ride that we've been on with globalization just steadily increasing almost consistently since the end of World War II has kind of shifted into reverse. And that means that investors need to be a little bit more thoughtful and specific in thinking about where they're going to get, especially their emerging markets exposure.
That's great. So, Jeff, you mentioned artificial intelligence. That's obviously a very popular theme that a lot of investors are interested in, but there's a lot of AI themed ETFs out there, including some from iShares. How do investors decide which ETF to buy?
We have two ETFs in particular here. One is IRBO, our robotics and artificial intelligence ETF, and the second is SOX, SOXX, our semiconductor ETF. And you can think of IRBO as more focused on pure play firms in the robotics and AI space, largely in software. You can think of SOX as a lot of the sort of pick and shovels, right? A lot of the inputs that go into artificial intelligence. When you're looking at selecting an ETF in the space, you want to make sure you have that breadth, right? A lot of us already own a lot of exposure, even if we just own something like an S&P 500 index to the so-called Magnificent Seven, right? Those big names that have already benefited significantly from the AI trade. And what we don't own is that broader set of other large cap firms, mid cap, small cap firms, ex-US firms. And so IRBO is designed to give you that breadth that you might have been missing and that breadth that we think will benefit as the trade broadens out. And then in SOX and semiconductors, we still think there's a lot of room in semiconductor opportunities, specifically as the shift moves from GPUs, which are really necessary for training these large language models, which is a lot of the compute power that's been used so far, to inference, where CPUs are much more required. Again, that'll be a broader range of semiconductor firms that benefit. Think of training as learning how to do a math problem. Think of inference as actually doing the math problem in real time. And of course, one of the things that investors always have to think about with ETFs, broadly speaking, is cost. And IRBO, I would point out, is actually one of the lowest cost robotics and AI ETFs out there in the United States.
Jeff, you also mentioned the opportunities in the healthcare sector. Can you talk more about those opportunities and why are thematic ETFs the way to capitalize on them?
We're hitting this amazing demographic inflection point. So, a lot of my job, and it's a privilege to get to do it, is to think about what are the long-term structural transformative forces that are happening out there in the world. And one of the most predictable, because it's sort of big, slow moving, you can see it coming, it's hard to change, is about aging populations, is about demographics. And so we're really hitting this inflection where in the next few years, there's actually going to be more grandparents than grandchildren in the United States for the first time in history. And just a few years after that, the same thing will be true globally around the world. That's amazing. It means more time for us. It means more time with our loved ones. There's also some predictable challenges that arise. We know that as people age, there's a greater prevalence of cancer. As people age, there's a greater prevalence of neurodegenerative diseases, in particular, dementia. knowing this is coming creates an opportunity, right? Because this is predictable, we're already seeing investments in companies that are really focused on these spaces, and we're seeing a lot of breakthroughs. We're harnessing what, for the last 20 years, has been amazing progress in spaces like genomics to target cancer treatments. And that last 20 years where we kind of figured out the human genome, I think the next 20 years are going to be about figuring out the human brain. And there, we're going to be able to make a lot of progress against those neurodegenerative diseases. And it's important to note, AI actually plays an important role here as well. So, again, thinking about neuroscience, we've actually mapped a full animal brain for the first time ever, and that was a fruit fly's brain with about 150,000 neurons. Finally getting there required an AI-assisted process. Now human brains are still a little bit more complicated than that of the fruit fly, but we're progressing rapidly. We can see AI allowing us to map the human brain, and with better mapping, with better understanding, will come better treatments. And then just thinking more broadly about drug discovery, drug discovery is an inherently trial and error or iterative process. And AI, if it's good at nothing else, is incredibly good at that iterative process, at trial and error, at iteration. And so, we actually think that a 25 to 50% decrease in drug discovery times can be achieved by artificial intelligence. So again, that's exciting for a variety of reasons. It's certainly exciting for investors. It's potentially even more exciting for those of us just living our lives and worried about our loved ones. And in terms of why thematic ETFs are a really natural way to capture these opportunities, sometimes sectors can kind of be too broad, right? So if you think about something like the healthcare sector, there's a lot going on there, right? You've got hospitals and medical providers, you've got insurance companies, but then you've also got things like pharmaceuticals and biotechnology. What thematic ETFs like iDNA, which is our genomics and immunology ETF, and iBrain, IBRN, our neuroscience ETF, enable investors to do is to target areas across healthcare that are in these more focused spaces where we're seeing the most growth, where we're seeing the most breakthroughs.
Well, Jeff, a ton of great information. Thanks so much for taking the time.
Great to be with you.